This is Bruce for Spartan Capital Markets, taking a look at this week's weekly technical market report for Sunday, July 30th, 2023. So this week we start with the Aussie dollar. Let me just zoom in. And so there's a few things key on the Aussie dollar. You see we have a continuation of this A, B, C, D, number one. We busted right through the support zone that was discussed last week, including this uptrend line. And before finding support down here and bouncing just a little bit. So the next support zone is down in this area right here. And sorry, I'm having a hard time reading that, but it looks like about zero. Anyway, it's in the right up here. You guys can read through that and you'll see it on the chart. And so either we get a bounce up into this resistance and turn back down, or we come back down here first and find support potentially, or go below this swing, which we come down here, probably go below this swing at some point as well. So at this point, we're extended on this 3-day decline. Very well could have an inside day. That inside day might provide a trigger for a direction short term. That's the Aussie dollar. And then one other interesting thing on the Aussie dollar is the monthly. You can see this bearish inverse hammer candlestick pattern. If we break this once low, that triggers, that is bearish. That could bring us down to this monthly low right here. That's something to keep an eye on because we have one more trading day left and that's it. Next, we move on to the euro dollar. The euro dollar, of course, also sold off, but you see the difference. It hasn't broken key support yet. It's come from a new trend high, continued its retracement, and found support right at the zone we talked about last week, almost by a pip, a difference. The intersection of these two lines. And that low then bounced. So it's already showing as support. We do have the 78% retracement here. So if we do come down a little bit more, I would expect to find some support before. I would watch to see if support is found by then. But as we go forward in time, we're going to rally, we're going to move up along this line. And so as we get away from this cross, then this line is going to take on a greater significance. And of course, we could probably throw a moving average in there to match that as well. So it looks like we'll probably get more of a bounce in the euro, and then we'll have to see what might be going on. This ABCD pattern is very well complete. Maybe we test the bottoms a little bit more, but I think I'd be looking for the upside first. Moving on to the pound dollar. Pound dollar, of course, also retraced. You see where it is within its ABCD pattern. It tried to go lower, but it has failed. 2 weeks ago, it stopped at the 62%, rallied, and then last week held around that zone, went through it a little bit, and then closed above it. So it does seem to be recognizing that level a little bit. But here's what's interesting right now in the short term, which is the relationship to this uptrend line right here. You see how we broke through very clearly. First, we had a fake out here where we go bullish, reverse through all these levels, through the previous support, close below the previous support, go lower the next day, and then bounce off that. So it's not clear that that's going to be sustainable, especially since we are now testing resistance of this line. So support becomes resistance. So this is classic bearish continuation, and that's what I would anticipate first, unless we get a strong rally above Friday's high and some sustainability in that rally. Then that would mean we're breaking through that trend line resistance. But the fact that we bounced right off it here, and the fact that it matches the 62%, when you have two indicators telling you the same price, it takes on a greater significance. Two or more. I mean, more is even better, but two is, and it depends on the overall context of the situation. But in this situation, I would say that, keeping in mind that this is an internal trend line. Still a good trend line, but it's an internal trend line. This is the more significant trend line, the lower one. So it wouldn't be surprising to see this tested as support at some point before this pullback is complete. If we do break through the line, then the ABCD target completes down here at 2657 zone. That's the pound dollar. Now we move on to the dollar yen. the case of the dollar yen, we had a really nice spike off the support zone that was hit a couple weeks ago as well. We tested it again last week at a slightly higher low. So we have a higher swing low. That's part of the definition of an uptrend. That's bullish, especially since the reaction off that was support was exactly what we would want to see. It looks like it will keep going. That doesn't mean it's going to keep going tomorrow. I wouldn't be surprised by some type of pullback, but and that should be used to get entries for this initial target up here. This is a completion of a simple ABCD pattern. Certainly, these higher targets can be reached as well, and as discussed previously, the measure move from where this current swing matches this previous swing completes way up here. Doesn't mean it's going to happen, but it could happen. So we could think of this first impulse move as the seed and kind of the underlying seed of uh, this movement in price. So this looks like it's going higher, and you want to look for entries on weakness. That's probably the primary direction for now, unless we go into some sideways consolidation for a little while. Always a risk. Now we move on to Hathaway analysis, where we're looking at Scott Hathaway's analysis, a geometric analysis of a couple instruments. The first one being the U.S. dollar, and so here we have just about reached support. I'm sorry, resistance, which is about 102.15. I think we went to a high of 104 approximately last week. So, and that is a convergence of this. Well, it's the convergence of, first of all, the 50% retracement. Second of all, this concentric circle right here, the 18th, 13th concentric circle, and you can see it with support here, and it has a relationship to some of these previous circles, and that's how it defines some value. And plus, we have a tangent here that matches that price as well. So, expectation is that we see some resistance. If it's long term, we have to see. For now, consider it short term, unless we bust through those highs and we keep going. That means that's a key pivot, and we're busting through the level, and now we move up to the next level, which is this declining line right here, and you can use these previous swing highs and kind of estimate that at some point, on your other charts, because I don't have the exact prices for that, but it gives you some idea. So what we're seeing here within this triangle, which has a relationship, by the way, to this triangle, is that price may be contained within here potentially for a little bit, because we pull back, we have this concentric circle here, the 13th circle as potential support, and you can see as we go forward in time that support is going to rise if we haven't broken through it. So that is the US dollar index. And then finally, crude oil. And in crude oil, if you look at this closely, if you've been following these charts at all, or this analysis at all over any period of time, you can see right here, just by looking here, you could see what clearly looks like a breakout of this initial concentric circle with the center up here that has a relationship with this vertical. And so that we have a breakout. We have a bullish breakout of the circle. The expectation would continue higher. The first target would be somewhere along this 10/11th circle. And you could see at this point, depending how fast we go, that could take us above this previous high here. And then if we break through that, then we're targeting the 9/11th circle. And of course, the prices are going to vary, of course, depending on when it might arrive. And you could see the time down here. This is a weekly chart. So, and then we do have an interesting relationship up here that has been identified at the -2/11th area with this 45-degree line, which was one of the initial vectors to create this concentric circle, and the crossing of this 9/11th line. So that is potential target zone as far as time goes. And so that's looking at like September zone. I mean, this is a weekly. We've got to give it some flexibility, but this gives you a rough estimate. At least you could see the estimate is that we're going higher. Okay, so that is it for this week's weekly market report, traders. Have a great week and good luck this week. Take care.